Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, August 23rd, 2010. Let's start by taking a look at the euro-dollar pair. And overnight we saw it testing the 1.2730 area, but it held as resistance. And we had outlined this as a very important level since it acted as support and was the support for this sideways channel we had throughout last week. But we broke it on Friday's trading, and now it has turned its role into resistance. So despite European equities actually being higher today, that didn't help the euro to rally, and we actually saw a decline in the beginning of New York trading, hitting a new low at 1.2646. On Friday, we saw this pair decline following remarks from ECB official Axel Weber, who also runs the German central bank, and he's usually seen to be one of the central bank's most conservative members, but he said that the ECB should offer unlimited liquidity for European banks into 2011. So this was more than economists had expected, that the ECB will continue to provide support for banks all the way into the first quarter. In addition, the euro had enjoyed a reprieve over the summer as concerns about Eurozone banking crisis had eased somewhat. However, recently, worries about Ireland's banks and Greek growth have flared, prompting renewed fears about the turmoil in the Eurozone government bond market. This week, we have three important auctions, debt auctions, including Spain on Tuesday, Portugal on Wednesday, and Ireland on Thursday. So we'll see whether demand for these higher-yielding sovereign debt remains strong, and that could be an important event risk this week. Also, the euro may be pressured as many of the periphery countries begin to take on heavy austerity measures which can weaken growth. So overall, we had seen the sliding in August, first as we had some of those issues flare up, but also a general move towards risk aversion and the greenback as a result of pricing in weaker global growth. So that's this period here in August. And following a very strong rally in this pair throughout June and July, now we look to perhaps, if we continue to fall below this 1.23 level, to come to test our support from early July, just above 1.25, but also resistance from middle of June around 1.2480. So we have the zone here that if the euro continues to be pressured by various factors, we should test and see what happens once we get there. Now, we also did have some data coming out from the Eurozone overnight, which was sort of mixed in that we had the preliminary readings for manufacturing and services PMIs for August. And for the Eurozone as a whole, we saw manufacturing decline to 55.0 from July's 56.7. Services, meanwhile, held pretty close to where they were with a 55.6 reading. Now, while Germany's services PMI did come in better than expected, as did France, what we did see was that other euro area economies drag down the headline index, which continues to stoke that investor fear that the fiscal tightening in these smaller Eurozone countries is going to crimp growth. So that could have worked to pressure the euro as well overnight. Turning to another one of our main pairs, the US dollar Japanese yen, we could see that throughout August we've been in a bit of a consolidation, a sideways pattern, with support at 84.70, but really the 85 level being a very important level of support, while resistance at around 86.30. Right? Now, overnight to enter this week, we saw the Japanese yen gaining on the dollar, coming close to retesting that 85 level that I mentioned earlier. Now, what happened here is that investors are pricing in that Japanese officials are further away from intervening in currency markets than had been previously thought. So that had given this pair some support around the 85 level, but now we come back to test it. We had said that the Japanese Prime Minister Naoto Kan and the Bank of Japan Governor Shirakawa were set to discuss possible intervention in a meeting, and in a phone call, a Bank of Japan representative said that the two actually did not discuss intervention, though they did discuss recent foreign exchange market movements as well as economic conditions at home and abroad. So that dialogue indicated perhaps a lower degree of government pressure on the Bank of Japan than had been expected, so we are seeing the yen gaining. If we break below this important 85 level, and we actually sustain that break, that opens up the pair to further declines, perhaps targeting the all-time low, which is 79.75. Now, we still have to see a break of 85, and for that break to hold before we start setting other support levels along the way to that all-time low. The Australian dollar US dollar had some interesting price action, and that is due to some political events in the country. We had mentioned how we were going to have the election for government there, and whoever won the most seats would be able to pick the prime minister. So coming out of the weekend, we see that none of the major two parties actually won a majority there. The current Prime Minister, Julia Gillard's ruling central-left Labour government won 71 seats, while her coalition rival won 72 seats, and you need 76 out of 150 in order to make a majority. So they're going to have to pursue independents and other smaller parties. There's around 7 of those seats to be wooed, and until then there's going to be some political uncertainty. So we saw that priced in with people selling the Australian dollars, as traders don't like uncertainty in terms of political regimes. So we had a move down to 88.50 when we opened. However, we saw a pretty strong bounce from that level, and there the currency strength was attributed to news of a takeover bid by a London-listed brewer of Australia's beer maker Foster's. So that helped that merger and acquisition chatter helped the Australian dollar to rally today, though we did hold down to this downward sloping level of resistance, and we can see that that held around 89.80. So we are in a bit of a descending triangle pattern now, with this support at 88.50, our downward sloping resistance trend line. So we'll see which way we break out of these two. If we break this line, we test our highs here around 0.9060, but if we break below 0.8850, then we have a much further way down to retrace the rallies we had seen in June and July. So you can see that this 0.8850 level is very important. It had acted as resistance in mid-June, again in mid-July, then we finally broke it, and now we're retesting it as support twice. So that could be a very strong indicator that we do have support here, and for now we may fall into a bit of consolidation in this pair as we see how risk aversion and the political situation there in Australia shakes. Taking a look at a final currency pair, the US dollar Canadian dollar, what we see is overnight we had moved in favor of the Canadian dollar, testing a low of 1.0443. However, in New York trading, we saw the greenback get the better of the pair as early US stock gains were paired, and we actually fell into the red at around noon New York time. So that helped the US dollar to gain on the Canadian dollar, moving us back above the 1.05 level. Now, if we're able to sustain this move above 1.05, that would be a bullish sign for this pair. And if we zoom further back, we see we have two target levels. Our two highs that we had in this pair. So if we move to the upside, first we would have resistance at 1.0580, and if we break that at 1.0675. So if we have more risk aversion, similar to what we had seen to end last week in this pair, then we definitely could see that scenario playing out with a move higher. However, if we have stocks gaining and we have a turnaround in risk sentiment, this pair has been in a bit of a consolidation throughout the last few months, so it could also dip back down to perhaps the 10250 level where we had tested earlier last week. But for now, to start the week, we do seem to have a move towards the greenback and risk aversion. Taking a look at the upcoming fundamental docket, the Reserve Bank of New Zealand posted its consumer inflation expectations for the third quarter at 11 p.m. Tonight. Overnight, Germany releases its final version of second quarter GDP, which is expected to stick very close to the advanced release at 2.2%. 4:30, we get the UK mortgage approvals data, expected to show a small increase for the month of July, while in the Eurozone we see a release industrial new orders expected to rise 1.6% in June, following the 3.8% increase in May. In the North American session, meanwhile, we start off with Canadian retail sales, expected to bounce back 0.4% growth following 0.2% decline for the month of June. That's followed by existing home sales from the US as well as the Richmond Fed Index. New home sales for the month of July are expected to show a rather sharp drop to 4.68 as demand wanes following the expiration of the government's tax credit. The Richmond Fed Index, a measure of manufacturing activity, is expected to decline, though still show positive overall activity. And that wraps up today's video recap. For more news, videos, and analysis, please visit our site, cmsforex.com. I want to thank you for watching and wish you good trading.